mode.
Good morning and welcome to this Fortnightly Market Outlook webinar. I am Devarsh and I am joined by my two colleagues, Nagaraj and Siddharth. Good morning, Nagaraj.
Hi, good morning. Welcome to Fortnightly Market Outlook webinar.
How are you, Siddharth?
I'm good. Welcome to the Market Outlook webinar.
All right, so let's begin. Is my screen visible?
Yes, it is visible.
Okay. So as we have been pointing out, the American market is in the phase of correction. From March till July, it went up about 19%, but in August, it has corrected by 5%. And here also, earlier, smaller stocks were outperforming the larger stocks of Dow. But since August, they have also started the correction, and small caps, which were about 8.5%, giving more returns on average to Dow. Now the outperformance has come down to something like 3.5%. And in August, the interest rates denoted by the US 10-year Treasury yield, it is also rising, and it is now back to the highest levels since 2022. Now, if we see the indices over the last fortnight and last 1 month, we see that most of the indexes are into correction between 1.5% to 4%. Nasdaq is the worst performer, which has fallen by 4.5% over the last fortnight. The S&P 500 is also down by almost 4% over the last 1 month. Compared to international markets, Indian indices have not fallen that much. Over the month, they are down by 2.5%, but mid cap and small cap are actually up 3.5%. So Indian mid cap and small cap have actually outperformed the global markets, and in fact, India's larger stock also. So the question is whether this is sustainable or not, whether Sensex or Nifty will come back, or this mid cap and small cap will start going down. My colleagues will try to answer this question. Now, when I look at these sectors, we find that the consumer durable has started performing well, and IT has started coming back. IT was one of the underperformers for the month, along with the banks and FMCG. Now, IT has started finding some bottom. So, if market were to do well from here, PSUs and IT are the one to back on the long side, while metal and real estate are the one to back on the short side. The flows from the FIs, which were aggressively long from the June, and they wiped out all the deficit. Now they have started coming down, and FIs have become sellers in the market. When I look at the economic calendar, nothing important is scheduled for the rest of the August month. Routine economic data is going to come, so no event are scheduled which is going to make the markets gyrate so much. So this is the overall macro picture. International markets and Indian markets are into the correction phase. Now, how long this correction can last, how technicals are shaping up, I'll hand it over to my colleague Nagaraj to take it forward. Over to you, Nagaraj.
Okay, thank you, Desh. Is my PPT visible?
Visible, go ahead.
Okay, yeah. Good morning, friends. Nagaraj, and today we will discuss about the chart pattern, and from smaller to larger chart pattern, what are the technicals, how the markets are likely to behave over the next fortnight. Without wasting any time, we will start from the daily time frame. Friends, what we observe on the daily time frame is a larger range bound action. Market was in a mode of correction, we have seen more of a time correction rather than any significant reversal on the downside as compared to the last 4 months a sharp up move. Currently, market is showing consolidation movement, range bound action, and this trend line you can see the currently facing resistance at the higher levels from the lower highs, and tagging the supports frequently at 19,250 to 300 levels. So this is on the daily time frame. If you look at the weekly, friends, market has witnessed a significant upside breakout of this trend line resistance, and now they're reacting from the higher levels. Currently, last 4 weeks of decline, it looks like a smaller decline from the higher levels as compared to these declines. If you look at these declines, we can see a large number of long range negative candles. As compared to this, we are observing a smaller negative candles, which is indicating even though market has declined from the higher level, it is more of a range bound action rather than any significant top reversal. So even though top has formed, market is in a correction. Currently, Nifty is placing sliding down to the important support. Now stuck at the support of around the 19,300 250 levels, and a move below this support could attract a lower support of this, which is important support as per the concept of change in polarity, which comes around 19,000 to 18,900 levels. The way market is coming, it is evident that we are likely to see the Nifty sliding below 19,250 levels, and on that front, we are likely to reach down to the important support of 19,000 to 18,900 levels, which the overall chart pattern looks like. If you look at monthly time frame, these candles, these formations are showing very significant upside moment after showing a 4 months of up move from the lower levels to high of almost 20,000. Nifty has reacted in this month. For the long term, this important trendline support is very intact. After downside, after the upside breakout of this trendline support, technically we believe anything on the reaction on the downside, if the Nifty, if the underlying takes this support, is considered to be an important support. For long term, the support of 19,000 to 18,000 is very crucial, very important. I'm expecting this market to reach out to this support over the next 1 or 2 weeks, and we are likely to see some significant sizable upside bounce from the lower levels. All the chart patterns are indicating. And friends, move on to the main story of the mid and small cap saga. So we have seen a continuous outperformance in the mid and small cap sectors. In this weekly time frame chart, you can see the vertical type of a move without showing any reasonable downward correction in between. We have seen a significant up moves in selective mid cap stocks, and this is what has happened. But currently, this circle marks in both the indices. What does this indicate? After showing a significant upside movement, one-way rally over the last 3-4 months, currently last 20 weeks, you can see currently this mid cap and small cap are showing some signs of tiredness. I'm not saying this as a reversal, but they are showing some signs of tiredness, like formation of doji kind of a pattern on the weekly chart. This circle is indicating, and on the daily chart is forming a lower top kind of a pattern. These are indicating that some tiredness for the broader market indices at the higher levels. So I'm not saying that suddenly from mid and small cap will come down drastically from here. But sometimes this technically we feel this caution, this alert, then one has to be a slow in aggressive. Whenever we go aggressive line, we have to put some brakes. So does this indicate that this indicates that we have to be selective in choosing mid and small cap. Still, mid and small cap stocks are moving up, but we have to be alert. We have to be cautious ahead. So the friends, the conclusion is the short-term trend of Nifty remains range-bound with weak bias. Nifty currently placed at the immediate support of 19,300, 19,450 level, as we have seen from the daily and even weekly chart, and that the way the market has formed this pattern, it is evident that Nifty is likely to break below the 19,300, 19,250 levels. On the occasion of a downside breakout, we are likely to see Nifty sliding down to the next support of 19,000 to 18,900 levels, which are the important base for the Nifty as per smaller and larger time frame, as per the concept of change in polarity. So on any rise, 19,500, the trend line, downtrend line we have seen on the daily chart is likely to offer. And during this downtrend, we believe in technicals that smaller resistance becomes a bigger hurdles, and as bigger supports are easily broken on the downside. So at this point of time, on the resistance side, 19,500 is going to be a strong resistance. Any upside bounce from here is likely to falter around 19,500, and we could see Nifty turning down from the higher levels. Long-term trend of the market remains intact. Further declines from here could be a buying opportunity for the long-term investors around the 19,000 to 18,900, where one may expect a good upside bounce. So friends, sectorally, banking, PSU banking, automobile, metal, media, IT are looking positive. IT is still showing some consolidation. I'm expecting a buy on dips for IT. very soon we are likely to see upside bounce to occur from the lower levels for IT, and PSU banking is doing very well. The signs of tiredness were seen in the mid and small cap sectors at the higher levels, as we have discussed. There is no confirmation of any significant top reversal pattern. We can't say that one way we are likely to go down in the broad market, but this is showing some flagging some caution at the higher levels. One needs to be selective in choosing mid and small cap sectors for longs. Friend, this is all from my side. Now, I would like to invite my colleague Siddharth Deshpande, who will discuss derivative aspects of the market. Siddharth, can you see the presentation?
Yes, Nagaraj.
Yes,
Can you do it?
Yes, now you are mute. Yeah, just now. Can you see it?
Yes, correct.
Yeah, you can go ahead.
Good morning. Today I will be delivering on world of derivatives, particularly focusing on Nifty and Bank Nifty indices, along with some insight in the sectoral indices. In the past week, we have witnessed a Nifty experience a decline of more than 0.9%, and it's noteworthy that index is currently trading at a monthly low level, both Nifty and Bank Nifty, which stand out to be consistent pattern of lower lows in the Nifty, which has formed from last 4 weeks. Turning our attention to the Nifty future, we observe that decline of almost 0.9% over the course of the week. Additionally, uptick on open interest suggests that traders have been positioning themselves at the short side in the Nifty future, anticipating further downside. Interestingly, despite the correction in the Nifty from higher levels, the implied volatility levels has remained relatively stable throughout the week. This suggests that option market has maintained a consistent expectation of price movement even amidst of the market correction. Take a look at the PCR, which finds around 0.98%. The value is positioned neither close to being overbought or oversold level, indicating a balanced sentiment among the market participants. Now we'll move towards the Bank Nifty future. Previous slide, Nagaraj. Yeah. Regarding the Bank Nifty in derivative performance, similar to Nifty, we have witnessed a notable accumulation of short position in the Bank Nifty future market. This is evidenced by the increasing open interest, with the Bank Nifty experiencing a decline of 1.10% over the course of the week. Both Nifty and Bank Nifty is currently trading at the lowest level in the current month. Despite a downward movement, the implied volatility in the Bank Nifty also maintained its stability over the week. This steadiness in the IB also attributed to relatively lower premium in the options segment. The put call ratio in the Bank Nifty has caught attention and is gradually moving towards the oversold region of 0.65, which is currently stands at 0.80 currently. It's also noteworthy to mention that the terms of the relative performance, the Bank Nifty has shown a weaker performance compared to Nifty in the past week. Nagaraj, next slide. Now we'll move toward the call and put option Nifty. In the Nifty option segment, call rating has emerged between 19,300 to 19,400 level. This suggests that there is a near-term resistance at this range. Or on the flip side, Nifty is expected to find support around 19,000 level, indicating a persistence of return puts in that area. If Nifty manages to close above 19,400 level, it could create a creation of long position, possibly propelling Nifty towards 19,600 level in coming session. Conversely, on the downside, traders are anticipating robust support around 19,200 level, which is followed by even stronger support of 19,000 level. This affirms the presence of a return put in those regions. This level might act as a barrier against significant downside movement in the Nifty in coming sessions. In the Bank Nifty put option segment, in the Bank Nifty option segment, put rating was seen around 40,900 level, followed by 43,500 level, indicating a support around this level in the short term. Bank Nifty, on the other hand, is anticipated to face a resistance around 44,000, followed by 44,300 level, where calls has been returned. Any closure below 43,900 level previous, any closure below 43,000 level result in more fresh short built up, perhaps pushing Nifty bank numbers towards the 43,500 level in coming sessions and beyond. We'll go to the sector analysis. Sorry. FI long to short ratio is currently trading below one level from last 1 week. It is currently trading at 0.67, suggesting that FIs are overall short in the market. Next slide. This is sectoral open-ended data analysis, where we can see short built up, long built up in cement sector, and minor and long unwinding in most of the sectors like banking, media, FMCG, oil and gas, and fresh built up of short positions in finance and banking sector and metals also. Yeah, next slide. This is a heat map basically of yesterday, where Adani Enterprises, Ambuja Cement, SSC, we see a long built up, whereas long unwinding was seen in Birla Soft, Indiabulls Housing, LIC Housing, and fresh short build up was seen in Mannapuram, Astral, Naukri, Emphasis, and whereas short covering was seen in Adani Port, AU Bank, and MFSL. Yeah, Nagaraj, next slide. Yeah, outlook for the market. So over the past week, we have seen something interesting in the Nifty future. There has been notable increase in short position being taken, and if we take a closer look at the option market, we see the highest open interest around center around 19,300 to 19,400. This might suggest that the market could face resistance around this level and may fall towards 19,000, gradually towards 18,800 level. Now it comes to the support level. The option activity gives us some valuable insight. Put writing, which my your trader sell put option has been quite active in 19,000 to 19,200 range. This implies that there is a strong potential support emerge around those level. On the flip side, we have seen a call writing around 19,003 to 19,400, indicating possible resistance around that level. Now moving toward the bank Nifty, let's see what horizon for the index. Similarly, the Nifty, bank Nifty, similar to the Nifty, we have seen a rise of short position in the bank Nifty futures over the period. For the upcoming week, we are looking at a projected trading range of bank Nifty index, which would be staged between 43,500 to 44,300 level. Now digging into the option segment, for the bank Nifty, call writing has been specifically seen around 44,000 level, followed by notable resistance of 44,300 level. This gives an idea of a trader might anticipating bank Nifty to face resistance around this point in the coming sessions. And for the support, we are seeing 43,900 to 43,500 level potential as a support. This level could act as a support in coming sessions. Yeah, that's all from my side. Over to Devarsh bhai. Devarsh bhai?
Yeah, am I audible now?
Yes, now you're audible.
Okay. Screen is also visible, right?
Yes.
Yes.
Okay. So we are in the market where around 19,550 we have said that the markets are bullish. And around 20,000 we have said that better safe than sorry. Now market have corrected from 20,000 level back to 19,300 level, where there are a couple of questions in front of us. First question is whether mid cap and small caps are going to start going down and whether they will stop their excellent outperformance which they are doing. Second, whether markets are headed to 18,900, 19,000 kind of levels or not, and whether the traders should go short on Nifty, short on back Nifty on a positional way. These are all questions which will be very clear over the next week. As my colleagues pointed out, around 19,300, 19,200, we have strong support. If we were to break it, and if we do not cross the downward sloping trend line as suggested by derivatives around 19,400, 500 resistance, and if we turn back from there, then we will go aggressively short on the markets. And also, whatever cash which we have asked you to generate, we are not asking you to deploy now. Let's wait, watch. If markets correct, and in fact mid cap and small cap correct more, then there will be even better opportunities at the lower level. So right now, as I've said, we have to be patient and we have to see how markets give us the indications. So what is the advice? Advice is, as usual, follow research recommendations. From 1st of May, MTF, E-margin, BSPL, BNPL, whatever name you call it, 86 recommendations have made excellent amount of money. In fact, another 4 recommendations like Shipping Corporation, Minda, Bank of India, TV18 gave excellent returns over the last 1 week itself in MTF category. Similarly, on the fundamental side, 91 reports have achieved their targets from the 1st of May. Excellent amount of money has been generated, as big as 27% in Gabriel to 15% in AIA Engineering, Wellspun 21%, MM Forging 23% in a span of few months. So we will keep coming out with more and more fundamental recommendations as well. This week we saw the targets of AGI Green, PAC, Jammu and Kashmir Bank, Woodco and CSB hitting their targets. So if you are interested in direct equities, on long-term fundamental side, investment side, we have our recommendations. If you are a trader, if you want to take leverage, we have MTF recommendations which are doing quite well. And if you are a long-term investors who wants to build a portfolio over the long term, then we also have DIY SIP picks. 18 picks have been released on July 21st, where many of them have started doing well also. So gradually every month, fixed amount of money can be invested in these stocks and buy and hold them over the next couple of quarters. These are likely to generate above average returns in your SIP. So that is all we wanted to share with you. Now we have some time, so let's try to address if you have any questions. If you have any question, please put it into the question window, which is there in the depending upon the screen you are using, and we'll try to answer as many as possible. So by the time I'll just wait for a minute or two for the question queue to get assembled. We'll wait for people to put in their questions. In the meanwhile, I'll ask one question each to Nagaraj and Siddharth. So Nagaraj, depending upon the charts, you said that PSU banks are relatively looking strong on charts.
Yes, Devarsh. PSU banking placed at the resistance. The overall chart pattern is looking positive, and this the PSU banking segment is outperforming the benchmark, both Bank Nifty as well as the Nifty. So I'm expecting more traction in PSU banking stocks in coming weeks.
Okay, thank you. Siddharth, you said cement sector had seen some kind of long build-up in derivatives?
Yes, so I think cement sector is only looking good on the charts. If you see the technicals also and derivative side also, cement sector is looking good. Both in that, even the in the oil and gas sector is also looking good in that category. Yeah.
Okay. So we have the first question from Vinay Naran. He's asking, how is pharma sector looking from charts? Nagaraj?
Yes, pharma is currently showing consolidation. I think it is going to be a buy and dips opportunity for a pharma sector in the near term.
Okay. Pradeep Gaurod is asking, is US market out of recession? So first of all, theoretically US market has not entered the recession yet. 2 consecutive quarters of negative GDP growth or a decline in GDP considered as a technically as a recession, and US markets are not actually into recession. If they were to go into recession, then it will have a huge implications. Raghuveer Singh Jadeja is asking, impact of WPI and CPI on our market over the next 3 months. So because they are high, the inflation is high, the interest rates are going to be higher in India. There is no question of cut. As and when the inflation comes down, then only maybe in 2024 we can expect some kind of reduction in interest rate in US and India. So the way data is stacked, I don't expect India and US to cut interest rates now. Shreyas is asking, is US market rally is over? Yes, it seems like US markets are headed lower and we have to be cautious. from international cues. Those negative international cues can affect Indian markets. Santosh T is asking, is next week it is going to be major crash? No. 300 point kind of correction is possible from 19,300 to 19,000 or 18,900. 300 to 400 point fall, if at all we were to break the important supports. We don't expect major crash in the 1 week. Suraj is asking, how is China's real estate giant declared bankruptcy that will affect Indian markets? So because China is not doing well, that means a lot of countries who depend on China are also not doing well, and that's why across the world we are seeing that the supply chains are getting affected for exports. India is also going to be it is going to be tough to export, as global economy is not as strong as what it was in 2023. So globally we have to be cautious. We will not be able to answer specific stock specific queries, especially on newly listed stocks. So recommendation we will keep on coming up with different newer and newer recommendation across the week, and whether it is MTF or fundamental. So I would advise you to keep following that. We will not be able to give you any stock specific recommendations here. But the idea is here is like this, that markets have shown signs of correction from 20,000 kind of levels. We have come down to 19,300. So first phase of correction is over. We anticipated this. We asked you to remain cautious. Now, whether to go short, whether to liquidate your existing portfolio or to deploy cash which we have generated, we have to wait and see over the next 1 week. So our attitude is we are cautious and we are in a wait and watch mode. That's all from our side. I hope you find this webinar useful. Any parting comments, Nagaraj and Siddharth?
Yes, yeah, we are concluding, and we have presented our view, and we have mentioned that follow our recommendation. We have done very well in the calls, and we want you to make it for a good profit sharing for the profit ratio for the client customers.
Yeah, for the next week, I think we are already advised to remain cautious, and I think that cautious stand will again get cancelled out if Nifty moves above 19,500 level. So traders, I will suggest to watch at 19,500 level and expect trend to continue again in next week.
Okay, thank you all for joining, and this concludes our fortnightly market outlook webinar on 19th August. Have a great weekend ahead. Thank you.